This is the MTPredictor weekly market update for November 3rd. So we got the Fed meeting out of the way, and again, no tapering in sight. Still the 85 billion a month in purchases, and I think that continues for the foreseeable future. They may talk about tapering. They may even actually at some point attempt to taper, but I think if they do that, it's going to cause havoc on the economy, and they'll end up having to restart any QE. Anyway, that Fed meeting is out of the way. Let's take a look at the S&P on the monthly chart here. I'm going to go through a number of stuff. These are the MTPredictor add-ons for NinjaTrader 7, so I'm kind of mixing it up platform-wise here. So you see these are the last prominent swing highs in the S&P. I'm just going to right-click here and take our decision point. This gives us levels of major support and resistance that we have on the chart ahead of time before the market gets there. And let me just drag this box over here so we can see that comes right in that 1800. I just think that number is so close. It's a nice round number. The market likes those, that it's gonna find that. But we are in this again, the monthly chart. We're in major monthly resistance, and we certainly could correct from here. Now we do have strength on this STF, this trend indicator, to the upside. We didn't close the week with any red sellers candles or anything like that, so we don't have an indication here that sellers are overcoming buyers. We'll see what the shakeout is from the Fed meeting. Let's go down to the weekly chart here. We'll see these levels. And again, if I just put the Elliott wave pattern on, you can see that the 5-wave pattern up, we've exceeded the minimum wave 5 and your typical wave 5 right in that 1800 level in the ES, the futures contract. So we did close the week with the red sellers candle there. That means that sellers were overcoming buyers by the end of the week here. And so we'll keep an eye on that. Correction wise, if we did just correct from here, we can take a DP off of the last swing into the high, and that puts us around 1600 in terms of the weekly chart. So like I said, that 1800, that nice round number is out there. That 16,000 in the Dow. We'll just take a look at the Dow here on the weekly chart. Let me get some of that stuff off here. So the Dow, has really been struggling in here. You see it's right about the minimum wave 5 target. It's been kind of going sideways as the other markets have been making new highs. So this may be some distribution going on up here. You see 16,000 is close. We're within a few days striking distance of that. If I take a DP off of the last swing here, it's 16,000 would be at the high end of that, top of the minimum wave 5, maybe just a little beyond that. So if the S&P can run up to that 1800, then we should see that 16,000 level in the Dow. On the NQ, all right, looks like I got the data in. Okay, so the NQ here, if I just right click, I'm just going to ask the software, is there any pattern here we should be aware of? And you can see, yeah, we just reached the maximum wave 5 target in the NQ here. Do have some strength coming in on the STF. We did end the week with the red sellers candle telling us that sellers were overcoming buyers. So we certainly could begin to correct here, or we may go sideways as the other markets maybe try to reach that 1800 and 16,000 levels respectively in the ES and YM. I'm just going to take a peek at the daily chart here. Still have strength on the daily chart to the upside. And then I want to look at the Russell, not much there. The Russell is on the weekly chart here. A little 5-wave pattern up right into the minimum wave 5 target there. And then so certainly, and we ended with a red seller's candle, so that it could certainly correct back to the wave 4 DP. I think with strength on the STF, if we do get a pullback, again, I think there'll be a little more shallow, maybe something along these lines, what we see between wave 1 and 2 and 3 and 4. Maybe not all the way back to the wave 4 DP, but certainly could. Just checking the risk reward to this target here. So about 2.5 times your initial risk on something like that. Again, if we're going to short the Russell, 1045.90, you could move your stop to break even there. Don't have any high volume spikes, no activity in here telling us that professionals are stepping into the short side. So like I said, I think this might be a shallow pullback if it does, and then the S&P try to hit that 1800 level. So bottom line, we're in areas we definitely could see corrections here. I was going to check the monthly chart, but I didn't like that. So we could definitely see corrections here. I just think that with those nice round numbers that we might see that. Maybe we get a little correction first and then they go, look for those numbers. We'll see. Anyway, if you're, long these markets, certainly again, we're in that area. We got to protect long positions, and then we'll see what we get from here this week. All right, so let's look around. Let's pick up with, let's look at gold. Again, the weekly short, the TS2, that's the potential, that's the ABC correction in wave 4. This is your wave 5 target down here. That's around 1160, I'll call it 1158. So we'd have to take out 1200 to get down to that level. Now you can see, obviously, we got a initial move here. We've got a little corrective move. Ended the week with the red seller's candle. So this is the period we want to see the next leg down here. See if this thing gets going. If it can't and we start moving higher, then maybe the bottom is in. It's possible. But I'd like to see if we could get this thing down. If we get this thing down in this wave 5 area, then we should get a correction back to the wave 4 DP, which would be back up around this 1450 almost level. And this would be a good buying opportunity down here potentially with a low risk, high reward setup. And the same thing in silver. Would love to see, where's my silver? Would love to see this thing come down. Here was our wave 4. I'm going to project down wave 5 since we didn't have an automatic trade set up. But this is one that some of our folks set up manually to the downside. So here's a wave 4 and here's your wave 5 target. And risk reward wise to the target there, about 3 times your initial risk. So again, these the stop could be to break even if you're not willing to risk the 1R anymore. We want to see with the weekly candle here, sellers overcoming buyers. We want to see that get some follow through and start taking out this prior swing and see if we can test the lows here. So we'll see. Again, the bottom could be in. I mean, I bought silver, physical silver, in this area just in case the bottom is in. If we look, let me kind of go back here on the weekly chart here, because remember this major sell signal here was a wave 5 top as well. And so remember we talk about after 5 waves you typically get a correction back to this wave 4 DP. And if I just extend the box here, that was what we were looking at here. Alright, now we may retest the level because we've got a pattern here. We've got wave 4 and here's wave 5. We could retest that level, but we'd be back into a major wave decision point off of the wave 4 swing. And this, we call it a decision point because the market will need to make a decision here. If this holds as support, then the decision would be to continue the trend which was up prior. And then if they take this level out to the downside, then it's telling us the tendency is that they want to wipe out this whole 5-wave pattern up, and we can look for wave 1 here and take a decision point off of the bottom of wave 1, and that's where we would be looking at a really just a collapse of the metals, somewhere around that $5 level, $6, so somewhere in there. All right, so this is why we'll see if we get a retest here. If not, maybe the bottom is in and we get a rally. And if gold and silver begin to rally, really begin to take out those levels where they were breaking out here to the downside. If we start to take out these levels to the upside, maybe beyond 30, then that's, if these are rising, then the stock market may be correcting. So we'll see how these play out here in the next few weeks. And we haven't taken a look at oil in a while because I haven't had the ninja charts up. So again, we talked about, let me add some more data to this chart here, that 80 to 100 and then 110 level, this consolidation, again, it still continues with the spikes up to 120, but you can see when they do break that 110 level, hit the 120, it's immediately correction back inside the range. We had that move, the fear of the whole situation in Syria and so forth, that kind of popped us out of that $100 level up to that 110 plus level. And we can take a decision point off of that last swing, and that's kind of where things hit the resistance and turn. And remember, we talked about this kind of wick here, in a transitional candle. They got to close above the decision point here, this blue buyer's candle, but you see they never were able to follow through and take the high out, and that's what we were looking for, to see if they would run to that 120 level. If they couldn't take that high out, then the tendency is this was going to fall back into that $80 to $100 level, so around 94.60 area is where the close was for the week on last week. The next support, we take a decision point off of this swing low here in terms of the weekly chart anyway. Again, bigger picture would be back down around just above that $80 level. All right, and that's, this is just where we've been. This has been one of the longest periods of consolidation in oil we've seen in a lot of years. So that's just continuing. And at some point, oil will break one way or the other out of this 80 to 110 level. And then you may get a big move come out of that. So we'll keep an eye on that. All right, the dollar index, again, the weekly chart did get a bump there, and you can see here's the last swing into this high here. If we take a decision point there, just missed the major support level. Now there is some strength on the STF to the downside on the weekly, so we'll see if this rally in the dollar is short-lived. If this thing rolls over and eventually does get into this just below 79 level in the dollar. If not, your next weekly resistance is going to be up in that 86 level, and you can see this last buy signal. Again, this was a major low with a high volume spike to it, so that told us professionals were stepping in there, and that's where your Jim Rogers and those folks were buying down here. That target you can see right around that 86.68. So it's still in play, but we'll see. It's we've been getting this choppy action, and of course the euro. Let's just get the euro US dollar here on the weekly chart. So again, we had a nice 5-wave pattern down. We anticipate we should get a correction back up to the wave 4 DP. That happened. We sold off from that level, and now we're retesting. In fact, if we take a DP off of the high there, so we've got some weekly resistance, right? If I can get that on there, right there. You see how good these levels are, and you can see the euro just dropped right off from this level here. Let's just take a look at the daily chart there. Here's that level. So on the daily chart, there would be a target there. Let's just see what the pattern up going into that, just an ABC, okay. But some may be short the euro here, and this may be the target there, about 5.7 times the initial risk. And the target there at 34.31, just about. So it should find some support if it does. If we do sell off into that level, should get some support there. Then we'll see if they take that level out. Then your next level be down in this area, 130. Okay, and lastly, let's take a look at some of our option candidates. First one was Deer. This is the daily chart here. Again, there was a little buy signal here. Got a pullback. Your next support in terms of the daily chart is going to be down here, just below 81. So like we talked about on this, best if you can be a buyer on a pullback. So that has pullback, and again that window it goes to middle of December, where we anticipate this has rallied every year for the last 10 years during the period from mid-October to mid-December. So that's what we're looking for. You can see this consolidation. We're looking obviously for this thing to break back to the upside there. All right. I think we had Honeywell was on that list as well. It is up, but this one, there's your next level of resistance here. We came into some. There's a little pattern here, and so it's gotten some resistance in there. This one's not a real strong one. It is up about 1%, but I just didn't like the pattern much on that one. Let's see, the one we just added last week, U.S. Steel. Okay, that one up about 3.2% since its start date, which was the I believe the October 30th. And you can see that's made a nice initial run here. It's in wave 5. Here's your typical wave 5. It's gone beyond minimum. If they take out last week's high, then we'll probably see the typical wave 5 there. May get a correction, so if you're waiting on this one, you might wait and see if we get a correction in U.S. Steel and maybe be a buyer. If we do get a correction, it may be shallow because we've got strength on the STF to the upside, telling us there may be more upside ahead. Let's see. Next, we've got ETN, which is Eaton. This one is up about 3.4%. Daily chart, you see it did run into decision point resistance. I think we were looking at this last week. There's some divergence up here, and so again, if you're going to be a buyer, and we're talking options on this, you can look for pullbacks. The next support in terms of the daily chart would be all the way down around 64. So we want to see it actually take this level out. Let me just see what the target is on this. Yeah, that's we basically came into the target from the long here. But like I said, this goes back to the last 13 years. This has trended higher between October 23rd and Christmas every year for the last 13 years. So we're just looking to see if that seasonal tendency continues to play out. And let's see, GPC, which is Genuine Parts. This one is still up just under 1%. You can see this was the This is the one we wanted to get on the pullback here into wave 5. So we're looking to see if that is a bottom there, and if we can rally back up to this, if this is wave 5, we should see a correction back to this level. That's what we're looking for here, around that $83 level. And I think Equifax, this one again had that nice run there. It's pulled back a little bit. We do have strength on the STF, so we'll see if that tells us that's, or it is telling us that there may be more upside ahead. It's just shy of this decision point resistance level, so we got to watch that level. It's going to need to take out the 60, I'll call it 67 to 68 level to continue that trend higher. This one's up about 5.25%. And then a couple others we looked at. I didn't add to the portfolio, but there was Costco. Kind of honorable mentions, I guess. Costco has been up fairly nicely. You can see the next resistance above 120. They're probably going to, they're pretty close to that 120 level. They've tested that before they corrected. So we're in that area. So that's why I kind of kept it off the list there. But it's up about 3%. And the other one I think was Nike. Nike's up about 0.5%. Again, this was just kind of like an honorable mention, but didn't add it to the list here. This one also now is wave 5 up, and if you're going to look at this one, wait for maybe you get a decent pullback to be a buyer there. Again, this is another seasonal one that has tended to do well during this period of the year, going back to the last 10 years anyway, back to 2003. And so it may be one that continues, but it's probably got to pull back some. I don't have strength on the STF here now, so we'll see if that gets some pullback. All right, so we'll continue to monitor these and the rest of the stuff that's going on there. So have a good week, good rest of your trading week, and we'll see you back next week.